Hey folks, welcome to the video. Anthony Special here with Hawkeye Traders. Hope you're having a wonderful day. In this video, I want to spend just a little bit of time going over some significant highs and lows and identifying how, if you understand exactly what volume's doing, that you can more often than not, you'll experience a low being a selling candle or inversely a high being a buying candle. And that's not consistent, but when you understand the actual printing and the actual relationship between both buying, selling, and the price action itself, more often than not, you're going to look and scratch your head and go, I don't understand. Why didn't the market go lower when the pullback or the correction, contained selling? Or why didn't the market go higher when the high placed was buying? So I want to kind of dive into that a little bit in this video and just work our way through. What we're looking at here is the SPY. This is a daily chart, meaning each candle represents 1 day worth of price action. Normal session, 9:30 a.m. to 4 p.m. Eastern Standard Time. So let's just I'm not hiding anything here. This is just a daily chart. What you're seeing on the bottom here is Hawkeye volume. And what you're seeing on the screen as far as the price action is concerned is just our volume paint bar, okay? Also our wide bar, and you can see these dots. These are the pivots. So I'm going to cover a couple things. I want to talk about kind of the different stages the market can fall into, and then how can we identify perhaps when or where the market's going to either continue, reverse, just potentially even correct a little bit. So as you can see, I want to take a look. I'm just going to kind of start right here. This is Friday, January 5th, and this is just a random candle I picked. This was really not premeditated in any way. And I want you to see here, as price has pulled back, and I'll zoom in a little bit so you can see it a little bit better. As price has made this pullback here, I want you to notice what the volume has done, right? So the volume here, the selling volume has done what? It's decreased, right? I mean, that was just, you can ask a 5-year-old, hey, did the volume go down or did the volume go up in this correction? So as the volume goes up in this correction, or the volume decreases and the price turns around to go up, I want you to look at this candle specifically. It has slight increased selling from the candle prior to it. However, look at the top of the screen. This candle actually closed higher than it opened, even though there was a strong presence of sellers there. So when there is that divergence, you need to now sit there and scratch your head and go, hey, have we made a significant enough correction here that we could potentially be pushing? And if you notice, not on any huge volume surge, we had a big up day to follow that. Now, if you were looking at this candle here and you were not applying the Hawkeye volume or Hawkeye volume paint bar, this would print green, okay? And you wouldn't really know that there was an increase here in selling. So when there's an increase in selling, you have to understand something, especially when we've reached a low, that the buyers are now stepping in and they're absorbing those sell orders. They're taking all those orders and saying, all right, we are not going to let you go any lower, no matter how much selling you desire to do. And then the next day, we have this nice push higher. Notice here also, this next little pullback places a higher low on what? Selling volume, right? This candle, again, closed higher than it opened, even though there was a presence of selling volume, right? So market continues on. We have what? Strong selling coming in. But guess what? The buyers said, yeah, that's okay. You can sell strong if you want, but we're gonna, we think that there's value here at this place and at this price, and we're probably not gonna let you go any lower. Right? Notice that at that big candle there, where there was enough buying interest, when the sellers pushed back to it, they found support. Right? Market goes on to make another new high, but notice as this high is being made, what's happening to the volume, the buying volume? It's doing what? It's decreasing. Okay? So if you pay close enough attention to the divergence or consistency, right? You got to look at both sides of it. With the volume and price, you can say to yourself, hey, we made a new high on decreasing volume. When we're making a new high, we should be seeing a new high on increasing volume. Okay, that's consistent with the impulse and the correction. So when we make a new high, and by new high, we just poked through this, right? We didn't really settle quite above it, but we poked through this on decreasing volume. There's a good chance now we're going to take correction. Now, I'm not telling you to short these, right? You don't want to start shorting things in what? Right? In a trending market, a market that is going higher, you're not looking to say, all right, now I'm going to come in and I'm going to start shorting everything. No. You want to stay with the trend, right? So you're looking for what? You're looking for the corrections to give you the lowest risk entry points. If the market's going higher, ideally, if you can find an entry on a correction or a pullback, there's a good chance that you could now minimize your risk. If you're wrong, you're risking less, and then optimize your return as the market continues in a direction. And as you notice here, every time we kind of pull lower, look at this pullback here, specifically March 15th, right? Selling volume, fairly high. The candle, however, does not close below what? This prior little low, right? So if we're not closing, and that's why I'm such a big proponent of closing price, if we have increased volume and we're not closing above a prior high or below a prior low or below an area where you can see the market pushed higher, pulled back, pushed higher, pulled right back into this candle here on fairly significant, buying volume here, right? But the market didn't go anywhere. In fact, the market then went on to push higher. Now notice, we made a high here with neutral volume. That's not good. That's not a strong high to me. I should be seeing increasing buying volume as the market's going higher. But that's not what happened. So, this candle here is noteworthy to me. I gotta keep an eye here on the top of this candle and say, hey, if for some reason we're unsuccessful in pushing above this, I wouldn't be surprised. Right? We made a new high on neutral volume, on fairly balanced volume. That's what neutral volume is, meaning that there wasn't a dominant party within the candle. So the market pulls back on neutral volume. Notice we go 2 candles, right, with increasing buying volume. But what? What happened? What did I just talk about? Right? Increasing buying volume, but no ability to close above the prior high. Okay? So notice this volume increases fairly significantly from the first high. But look at this candle. Right? I'm going to zoom in. Look at this candle. Does this candle to you, right here, look like a candle that is strong? Right? Right there. Right? That candle right there. Does that candle look strong to you if for 4 days in a row we're increasing buying volume? 3 days, right? We have this low volume, increase day 1, day 2, day 3, failure to push above that prior high, right? The wick of that prior high, failure to close above it, unnotably compared to the prior several days, high buying volume. That tells me that there's a reversal probably brewing, okay? And guess what transpired after that? A reversal, right? A significant one at that. So from this candle specifically, where we can say, hey, we've had increasing volume for 4 days, 3 days, notably higher buying volume, inability to close above the prior high in this really weak-looking candle, well, guess what happened? The market fell back, roughly 5.5%. Right? Got strong selling coming in here. You see a Hawkeye wide bar. You see no ability to push above the wide bar. Right? We close below it here. Right? We push below it, close below it. And then what happens? Well, the market sells off. Right? Then, guess what? the low here of this correction transpires on high selling volume, right? So what does that mean? It means the sellers have given it all they have, and they don't have anything left, and the buyers have absorbed whatever the sellers had, right? The sellers lost energy. The market works very much like rolling a ball, right? If you're rolling a ball, that ball's going to keep running until what? The energy runs out of it. The inertia runs out of it. The market will do the same. It'll sell off until the energy runs out, right? And then the energy becomes overtaken. Well, and then we sat here and we turned around and notice that every low we put, the next significant low we put in here was what? Selling volume, right? And then we started pushing higher again. So the whole concept of this video specifically is to just talk about understanding what the market's doing at any given point in time. Now, every candle that prints with every volume relationship is not always going to mean something, okay? Like, notice we only really focused on the candles that mattered because, I don't really care what these little random candles are doing. I'm looking for lows in an uptrend to potentially get what? Long. I'm looking for failure to push higher where a correction may occur, right? And then I'm looking for the correction to do what? I'm looking for the correction to run out of energy so that the market can continue back in its direction. I mean, guys, listen, I don't have to do this to make it fairly obvious that, we're in what? We're in an uptrend, okay? Here's COVID, right? We had a really, really great run. We had a nice, big, healthy correction. We pushed through that prior high, and we're still in an uptrend. I mean, we are making all-time new highs, based on today's close as I'm shooting this video. So which direction do you think you want to trade in, right? Ask any 5-year-old, say, hey, son, daughter, I'm going to just kind of zoom out the market here. Are we going from the bottom left to the top right, or are we going from the top left to the bottom right? More often than not, the market, at least for now, is in a fairly decent uptrend. And then you have to zoom in and say, okay, what's happening right now? Right? Right now, we have this nice run, and then we find this spot that provided the reversal, and then, like I said, high selling volume put an end, right, a climax into this low, and then we started chipping higher again, right? We found a little bit of consolidation here as we pushed through the prior highs, right? And then what happened? Notice this candle right here. Right? This little correction transpired, and notice this candle right here. What happened? Super strong buying volume. That said what? That told me what? Hey, Mr. and Mrs. Trader, you should be aware that we've pulled back far enough where the buyers have come in and taken this candle from the open to this low all the way to close at the tippy top of the candle here. That's very bullish. This is a very bullish candle, okay? That's why we highlight these. This is what? A very bearish candle. The candle opened at the high and closed within probably 10% of the low. That's bearish. So we highlight these with our Hawkeye wide bar so it draws immediate attention to you to go, hey, something? I really got to pay a little extra attention around these wide bars because they're telling me something. I need to interpret what they're telling me. The market is always going to leave you clues to what it plans to do next. It's your job as the trader to ultimately identify what the clues are and then put that into your trade plan. Your trade plan is going to be very different from my trade plan, and that's totally okay, right? But one thing shouldn't change. If the overall trend is to the long side, unless we really have a lot of evidence to prove that we're correcting to take a short, we should be focused on the direction that the market's ultimately going. Guys, that's just what it is. It doesn't matter if you're day trading or intraday trading or swing trading or position trading. Ideally, you want to be moving with the direction of the market. But the story is told in the relationship between the volume and the price action. When I see a candle that looks like this with a big tail on it, right? Big wick on the bottom. And this candle pushed all the way down, but the buyers came in and pushed it all the way to the tippy top. that tells me it's a pretty good chance that this little correction is over. And guess what? The market goes up again, right? We get a little low volume, market goes up again. We get a little increased selling, market comes back down. We run a little more increased selling, market comes down. We hold these candles here, right? We've just created what? A floor of support, or a base, right? That base is now support, right? The sellers pushed against it, and guess what? Even on that higher selling volume, the sellers were unsuccessful in taking price lower. So we're bouncing at an area of support, and now you can see that we've utilized this base as the next move higher. The market only does a few things, okay? There's intricate phases if you want to get deep into it, but if you want to keep it super simple, the market's trending, right? It's consolidating, or it's reversing, right? So in the consolidation phase, there can be consolidation and then continuation, or there can be consolidation and a reversal. But outside of that, the market impulses and corrects in a direction most of the time. All right. Now, when I say most of the time, the market also is going to fall into periods of consolidation. But if the market's trending higher and then it consolidates and then continues to trend higher, it doesn't change the overall direction, right? The market impulsed, consolidated, corrected, impulsed, consolidated, corrected, impulsed, consolidated, right? And now perhaps we are going to drive off this consolidation rather than having a correction. And that's what it breaks down to. If you can identify those little nuances and you can interpret what price and volume are telling you at those periods of time, guys, it's super, super important, because the reality is it doesn't matter if you're day trading, you're swing trading, you're position trading. It doesn't matter if you're trading stocks, futures, forex, cryptocurrencies, options. It really doesn't make any difference. Understanding that relationship between volume and price action is in fact the key that will unlock basically unlimited resources of the market. Okay? As you can see on my screen, if I hide my drawings, what's here? Volume, price action. If I want to trade intraday, what's there? All right? Here's today's shortened session. What's there? Volume on the bottom, okay? And price action. This is a 3-minute chart. Right? Volume and price action. Right? What's happening, right? Buyers are pushing up. We get some selling to come in. We correct. Guess what? We get a little neutral volume. Buyers continue to push up. Little neutral volume. We get a little correction. Keep pushing up. But if we can identify the areas that we can no longer push lower, right? Notice that what's here? There's selling coming into this level, and we're unsuccessful in following through, right? Here, there's what? Here's another consolidative state. All you got to do is come in here, and this is great practice when the market's closed, to say, all right, can I come in here and identify all these areas? And if the market is in fact trending, you should be relatively successful in finding these areas to continue in an overall direction. Right? Okay. Right there, that's where we pulled back. Right? So the market's doing what? It's making higher lows. What direction is the market going? It's going higher. So, I wanted to take an opportunity to kind of shoot this video. This is more of just kind of an identification video than anything else. But at the end of the day, guys, whatever volume and price action is doing is what you need to be understanding. Because everything else that's going to print on your chart is going to be lagging. What does that mean? It means that a Bollinger Band is going to print based on what's already transpired in the volume and price action. Relative strength, stochastics, moving averages, VWAPs. Everything is lagging what the market is actually doing. So if you can have the foresight and understanding of the relationship between the volume and the price action, that's your best shot at understanding what's going to happen before it happens. Because the market will leave you clues. You just have to be able to identify them, which the software will do, right? And then you need to be able to interpret them, which is what we're going to teach you to do. And then you need to be able to put it into action or implement it into your trade plan. Okay? And all these steps are what's going to take you to trading with a screen cluttered with garbage to trading with a nice, I call it a naked screen or naked chart, because at the end of the day, I can make all my decisions based on this chart with less or nothing on it other than the volume and price action. Okay? That's how I trade intraday. That's how I swing trade. That's how I identify positions I want to take. I look at the volume and the price action. I make my own assumption based on what the market's trying to tell me. There will always be clues as long as you're willing to look hard enough for them. So I hope you enjoyed this video. I hope you learned something from it. What I'm going to do is I'm going to drop a link below this video for a training webinar where I'm going to go even further in depth into the relationship between volume and price action. This way you can really deep dive into it, have a full understanding. I encourage you to take some notes, all right? The step after that is we want to get these indicators populating on your charts. Our indicators will work on TradeStation, TradingView, NinjaTrader, and MetaTrader, okay? As I mentioned before, you can trade stocks, futures, forex, cryptocurrencies, options. You can day trade, swing trade, position trade with it. Any time frame that your computer or your software will print, your platform, this will work with, all right? So I encourage you to take these steps, focus on the volume and the price action, and in return, you're going to start to get this leading thought process that says, hey, I see this happening. There's a chance that this means XYZ may likely transpire next. And once you have that foresight and you're in the zone, I'll tell you something, guys, there's nothing else out there that's going to give you the advantage that you absolutely need to have other than understanding volume and price action. And as you can see, our software prints nice and clean. You get the volume below, you get the radar dots, you will get the volume paint bar, you will get the wide bar, and you will get the pivots so that you can see with great clarity what's happening, when, where, and why, so you can make the best decision about what could then transpire next. I appreciate you guys. God bless. Have a wonderful evening, and I will see you in the next video.